guys to consider for your high yield savings account. And so you have everything
All
from,
right. Somehow we
talk
got into
about
an
cash
ad
on
already.
hand. You have your emergency fund.
But
You have your high yield
not one to talk.
CDs that you are continuing to earn money in. And listen to this, guys. When I don't have anything of significance that I want to buy right now, I overlook my calendar. Let me know if you guys do this. And then I'll say, you know what? I won't need this money for the next 18 months. I won't need this money for the next 6 months. But all the while, I am earning 4 to 5% on this money versus letting inflation eat it up. So I want you guys to have and review the cash you have on hand that's liquid, meaning that you can access readily, easily, okay? Relatively easily if you needed it, okay? And then, only then, if you don't need it, you do something like this, okay? Check this out. I want you guys to take advantage of free money, okay? That is everything from your HSA,
yes.
everything from the company match. If you fly like I do, you might have reward points that you guys can take advantage of, okay? So, for example, one that's oftentimes slept on that I want you guys to make sure you are considering is your HSA. That's your health savings account, as well as your Roth IRA. So really quick, let me go over this because this is one of the life hacks that I did to become extremely stable in my wealth. Okay, so I pride myself on being healthy, being fit. So I invest money into my health savings account. This is for health. Okay, this is
interesting. This is a communications company. So this is in the COHR category. It's similar to Core, AOI, etc. I don't remember the other ones. Light, Lumen. Should have brought another seltzer upstairs. Oh well. It's too late now. Yes. Similar. Okay. I'm just going to assume yes. I mean, that seems like yes. Alright, so Robinhood is, problem with ChatGPT is I don't care if it uses another model. It's pretty much the same to me. Otherwise, I would be a better update candidate. Upgrade. Candidate. What the heck? Did it even give me the Q3 earnings after all this? Oh, it's all the way up here. Not bad. Revenue doubled year over year. Wow. Crypto revenue is up a lot. And then CN. Man, I kind of want to go get a seltzer. That's okay with you guys, right? This should be able to, chat should just be cooking while I get that. And then CN revenue is up 30% year over year. I'm gonna get a seltzer. You guys can watch and all that. Yeah, I mean, I'll be back very soon.
This is for your doctor's appointments. This is for your prescriptions. This is for if you ever need surgery, if you ever need medicine, if you ever need a procedure done, okay? And so when I don't use that money, guys, look at this. Look at the family. For those of you that are married, you can put up to $8,550 for your total contribution. And if you are over 55, you can put over $9,550. I've been doing this for so long at the max level. January 1st every year, I max it out. So I have the whole year. Listen to this. When you max it out, you have the whole year for it to grow just like it would in an investment. So when you don't use the money, this is what I love about an HSA. Get this if you don't have it, because this is a life hack. This is a wealth hack. Okay, if you invest in your HSA and you don't use the money then becomes invested in like what you guys would know as a growth ETF. So like say the QQQ, okay, something like that. And then over time, the course of the year, when I say time, this money is growing. My HSA alone is near $1 million just off of all the years that I stay healthy. Never had to go to the doctor because I'm going to the gym every morning at 4 or 5 in the morning. I'm doing all the things. I'm taking my walks. I get my 20,000 steps in a day, and I'm doing these things. Everybody let me know if you have a HSA and consider a plan that has it if your current health and medical plan don't have it, okay? The Roth IRA, look at this. The Roth IRA is a limit of $7,000 for this year, $8,000 if you are over the age of 50. Okay, you have no income restrictions if you are doing a backdoor Roth IRA. So some of you may say, Coach, what if you make more than the allowable limit? Okay, so if you ever are coming up against that, I want you guys to consider the backdoor Roth IRA. Okay, this allows you to do the same exact maxing out.
Let's jump in a little breakdown here. We appear to be live everywhere that matters. YouTube and X. So, as long as that continues to be the case, which seems to be, although X is always so laggy. So my phone, it's interesting. I walked away, my phone Bluetooth disconnected, even though my AirPods were in my head with my phone. Maybe I left my phone here. That's probably what I did. If there's a problem, it's usually my fault, so that's how I know. I did something wrong. Okay, X is back. Alright. $1,000 into these two stocks could surpass your full-time job. Whoops. I don't think that's
this is
strong
Sam
enough.
Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Oh, yeah.
Sam Putnam.
Can
This is Sam
surpass.
Putnam.
This is Sam
That's what
Putnam. This is Sam Putnam.
Alright. I'm not going to do any silly business repeats again. That was just a little shake it off goof. Here we go. If you've had these, they're good. Real fruit. Real fruit. Spindrift. Now the lighting is pretty good here. Check them out. Sorry. $1,000 into these two stocks can surpass your full-time job. I'm not a financial advisor, but the stocks look excellent. The companies are Hood, Robinhood, ticker symbol HOOD, and CN, ticker symbol CIEN. That's a optical connections company for data centers. Of course, everything related to data centers is on fire. This company had over $1 billion in revenue, up 20% year over year, and Robinhood revenue doubled this year. So if you're wondering if Robinhood is here to stay, it's definitely here to stay. Crypto revenue is up as well. And everyone who's been talking about data centers being a bubble or the depreciation schedule not being accurately recorded, aka blah, 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 the chips get replaced every couple years, and yet they're written off for 6 years, and that's going to kick off this whole Enron type untumbling of this circular growth that's fueling almost the entirety of the economy. Fear not, because the companies are still going up. Okay, so stay away from rare earths, in my opinion, right now. Stay away from quantum, in my opinion, right now. And let's look at companies that are building out bases, aka there's a lot of price agreement at a level. And you know what happens when everyone agrees on the price is human nature is that when there is a lot of volume coming into a stock like that, and they've had big moves in the past, chances are that price is not going to be agreed on for very long. So often in a good way, aka the stock goes up. So let's take a look at these two stocks. Not a financial advisor again, but hope this helps.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is Robinhood. Crypto revenue grew super fast. Net income, so that's gross income. So that's like how much money gets paid to you if you're at a lemonade stand and they give you cash, minus, I'm not gonna lie, I don't know what net income is. I think it's pretty much revenue, so it's a lot. Over $1 billion, doubled year over year, new company record. But we don't have to be financial whizzes here. Look at the chart, okay? Recent earnings sold off, big move after this earnings, huge move after this earnings. This is Q1 earnings. So that is in April. Quarter one happens in January to March. So now we're here. We've built out this base. We've been super choppy. This earnings reaction wasn't great. But what we do have is sort of some price agreement here. And this is what I'm talking about. This level came down to here. It's a little bit higher. You know, it's kind of where it sold off here as well. It's a little bit higher than over here, if we're being exact, which we really ought to be. But what can happen is if this Robinhood goes sideways this week, and here's the broader context, is the market appears to be going up. It is going up right now. Went up a lot a week ago. There may be some movement over the last week on the expectation of a rate cut. It's at like 80+% that they're going to cut rates on Wednesday. So that may be part of the push here after what was already a big move up. So typically you would think after like 6 days in a row, you might get a pullback. And I'm not saying that's always what happens. I mean, everyone was gushing about July. This is like 10 days up. At least we went sideways. Sort of proves a point. But September, 6 days up, kind of went up like another 6 days, right? And then finally had a little pullback. So we definitely could just break out here. And IWM looks especially juicy because all the small cap companies get helped by lower rates. So that helps companies that are big, and Hood is a big company. Now, with that said, it also did pull back pretty significantly on Friday. So if this can build out a base maybe for this week, and we can get through the rate cut news, and Hood is still sort of at this point where, you know, it tested it here, broke through, came back, tested it here, broke down, tested it here, broke through. This level is definitely important where it's at 132. Okay, so as long as you can pick a spot to buy it that makes sense. Obviously this is selling, but clearly found a spot at 132 to level off at. If you can find a spot where it's interesting, so say buying it at, you know, over this high, so buy at 132 risking 25 cents, that would be awesome. Mondays stocks tend to go up, but I'm recording this on a Sunday. Futures hasn't opened yet. If this gaps up, this is super detailed here, but if this gaps up to here, maybe you can buy it risking this high, but ideally it just goes sideways or down a little bit and then gaps through this level. So then when people are buying it up here, you're already in from 132. So you don't want to be buying it up here at this breakout. You want to have a little bit of a cheat entry. So that's the real detail on Hood. We'll get into a little bit about what they're up to. They're up to a lot. And another company that I want to look at is CN. So it's also building up. It has earnings on the 11th. So today's Sunday. The 11th is Thursday. So if this can go sideways, and maybe it can go up a little bit, but you got to get through earnings for this. So keep watch on this company. What's happening here is I think this company could go because, well, if those earnings are good, of course, that would really help. But look at this move on Coherent. So Coherent's like a physics term. It's an optical communications company. So you need these fiber optic connections for data centers. Big move. Very big move. The earnings reaction came back. Okay, so sold off, but the market as a whole sold off. So there's no worries there. Light did hang up there. Earnings reaction held up. And even with all these big down days in the market, Light just went crazy. So sure, Applied Optoelectronics looks pretty messy as always. I mean, this is good price agreement here. But in general, I mean, I just, this has not been easy. Even if you got it on its quote unquote upswing, the most you got was, it's a lot. It's 70%, but this is a long time. This is a full month of it going sideways before it broke that trend. So it's just not easy, this one. So I would kind of leave that off your plate for now, even though, I mean, it's definitely interesting. The moving averages are coming together. You know, I could change my tune in a couple of days, but right now, just don't lose sight of this one. CIEN, especially if those earnings are good. It goes up, you know, to say 214. You can risk that high volume close on that earnings day. And, you know, you could see a move like Light. Of course, the devil's in the details. You know, if you risked the high volume close here, you can see the high volume. This is the close of the candle. At 238, you know, it tested, might have broke through here, or you might have stopped out here. But you can see that level does matter. It's not precise. This is a little below it. But once it got through, you know, it really went, and you got another 30%. And this is in a very short time period, too, in about a week and a half. So that's the opportunity. The opportunities are not, you know, abound right now. Because we're still are just working out all of this indigestion we had for the last month. I mean, this has been a full month since this high here. 2 big down days here and here. You know, this is the rare earths down day, and crypto liquidations. And then we're working through just some ugliness here. So those are the ideas. Let's look at a little bit about what they actually do. Okay? And actually I personally want to just double check I remember what happened on November 20th, because that was a pretty big down day. I've actually been using Gemini a little bit, but I keep coming back to ChatGPT. They all sort of have their places. ChatGPT is pretty good at the actual facts for companies. Earnings per share beat estimate, blah, blah, blah. I'm not too worried about that earnings because we're already beyond it. What we have to make sure is that they don't get over their skis and start acting like a Meta. Meta just had some cuts in their metaverse division, and the stock went up a little bit, you know, percents, maybe up 5% or something like that. So Robinhood's not a Meta. I'm just saying that everyone's been giving them credit for, you know, rolling out this crypto thing and this big thing that's supposed to attract a lot of business away from Schwab and all that, and prediction markets. And I mean, everyone loves prediction markets right now, but 3 years, I'm not sure I want to be totally invested in a company that's banking on Democratic presidents or administration, which could very well be the president in 2028, being excited about prediction markets, right? So we don't have to worry about that. But in a way, we do, because the price now is, based on that. There are people buying it who are thinking about it in a few years. So it does matter, but for us, only the level there really matters. So that's sort of my way to hedge that, hedge those comments. But just make sure you understand this is not the Robinhood of 2020. It's been 5 years. This has grown into basically, it really has become a Schwab competitor. I wouldn't say like a JP Morgan or, Goldman Sachs competitor or anything crazy like that. But, take a look at Interactive Brokers. That's sort of comparable. Not really, because they're so far along, but it's probably the closest public comp in terms of actual technology. Otherwise, SoFi does lending. That doesn't really help. But yeah, SoFi and Affirm are at least in the same basket if you want to look at those. Look at those charts and look at that performance. SoFi, I'm not super excited about right now. It's kind of just choppy and ugly, right? But CN, another one that's super interesting right now. That's that revenue up 30% year over year. It did repurchase $80 million a share, which is, it's a lot of shares. And looks like this is not helpful at all. See, this is why I've just been this is so ridiculous. So ChatGPT is the best right now. And, use it yourself if you want to just double check before buying something. And it's pretty good. CN had nearly 30% year over year data center driven demand. So that's good. They have this backlog, and sure, keep an eye on the whole AI bubble talk, but it's going to affect the whole market. So it's not like, any of these individual companies are going to get hit unless there's specific news about only using a certain, switch or something. That's not going to reach the mainstream anyway. So all we can really do, if I'm being real with you, is just look at the chart. And, we can look at similar tickers. I talk about these. Cisco is fine. These are just slow moving. Nokia is, they had that NVIDIA deal. But really the best ones are the ones I talked about. Light, Lumen, maybe I didn't mention Lumen. Might be buyable here. This is pretty significant sell off. But, if it goes sideways, it could be buyable. Light is pretty tough to buy up here. It probably needs to base to get interesting. And then Coherent would be great to see a base as well. This is a pretty awesome example of how sometimes, when stocks are up, when the market goes up 6 days in a row, you can still buy them instead of buying the market. So did we know that the market was going to keep marching up here? No, it definitely seemed like it would take a little breather like it did over here. But I think the rate cut talk is just helping everything. And a move like this is why you get positioned in individual stock. It's a breakout as well, as opposed to in the market as a whole. So the company, though, is CIEM. That's the ticker. And Hood, HOOD, Robinhood. If you like these ideas, hit that like button for the YouTube algo. If you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. I post that, a 30-minute course in the YouTube posts once a month. And if you want to jump in the Discord, give it a trial, head over to Stocks Community, construed.com. See you the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right. Let's see.
Out at the limit that you're available based on your age, but then over and beyond that, you can put in more. So some of those limits, look at this. Max out your regular 401k contributions, whether it's $23,500 or $31,000 of your employer match first, then contribute the remaining amount as after-tax dollars to your 401k and convert those into a Roth. Okay, that is otherwise known as a backdoor Roth or Roth IRA conversion for you that make more than that threshold. Okay, and for everybody else, if you make, say you make under 200k, you make sure you max out your regular Roth IRA, the one we all have or that we did have. Okay, how much debt do you have? And that's what I want you guys to assess. That's number 3. How much debt do you have? You need to know this number. You need to know going into 2026. What are some of the big things you
I thought this was an earnings move. This is not an earnings move.
Tackle, okay?
I feel like an idiot.
And then what can be paid off or what can be paid down is what I want you to think about going into 2026, okay? Because I always say, people ask me to come speak, come on podcasts, come do panel discussions. And when I'm talking about wealth, I tell them the secret sauce for me was being debt free. The secret sauce for me was being debt free.
Oh, what's this other little robot company? My
journey, when I first thing I say out my mouth is I retired at 30 years old because I became debt free. That set the stage for everything flows from me being debt free. All this philanthropy, all this giving back, all these acts of kindness I'm able to do all over the world and bless all these people is because I'm debt free. And I avoided lifestyle creep. I avoided lifestyle inflation. I don't keep up with the Joneses. I look every single day at who I can be a blessing to. I don't use my money to try to front, stunt, and belittle people. And so I'm able to do that because...
All right, let's jump into a little breakdown here. That does not have Q3 earnings. Not at all. Definitely has dilution. Sure of that. Could have sworn this is a robot company. Oh, I think I'm thinking of Kit. Yeah, that's what I was thinking of. Kit. Yeah. There we go. Okay. This is a spin-off or something. This big oil company. It's a spin-off or something from them. It's actually an energy company. Yeah, Shell. Pretty sure. Public offshore oil company, right? Something like that. I think. No, it's not. Alright. Well, it was a merger, it was a SPAC. Does it have big investors? From a deep sea oil company? There's something to do here. There's some sort of story here with this company. I'm almost sure of it. Oh yeah, Transocean. Yep. Okay. Okay. I got pretty excited there for a second. Sorry about that. Devon Energy as well. So I'm not sure there's a Trump connection here at all. But all right. 2 million is 400% increase. Oh boy. 4 billion. $800 million of free cash flow could pay for it. Yeah. All right. Hydrocarbon exploration. Is hydrocarbon exploration fracking? Oh my god. I hate this meta AI. It's just so invasive. Alright, whatever. These are very similar companies. They're both under $40. There's a connection. Kit, Nauticus Robotics. This one stock, well, it's not just one stock, it's a $1 stock. Very sloppy today. Sloppy Sundays. Drinking a lot of seltzer too. If you are on the YouTubes, I can see your chats. So strong to open this thing. This $1 stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors might say to buy as much as possible before December 12th. Trump's energy stocks could help you retire early, and this $1 stock, ticker symbol KITT, Nauticus Robotics, has investment from Shell as well as Transocean. there's another company, Devon Energy, with $4 billion of revenue, ticker symbol DVN, that it contributed some money to Trump or the Republican Party through super PACs, right? So it's not a large amount of money. I'm not even going to state the figure because I don't think I necessarily know it off the top of my head or that it's material. But the point is, all these companies get helped by Trump and the administration. Solar companies also got helped, but these ones in particular are doing really well. Nauticus had that $70 million initial investment from ticker symbol RIG, RIG. It's a big company. They do offshore drilling. And most recently, Trump is rumored to be signing an executive order soon that helps robotics. So Tesla is up significantly on that rumor. All the little robotics companies are up. KITT, this one, as well as RR, Rich Tech Robotics, Serve Robotics, SCRV. So is it a great idea to just go and buy all the robotics companies? I don't know if that's a great idea. Like, sure, you could have said, if I had just bought all the quantum companies, that would have been awesome 6 months ago. Or if I had bought all the Bitcoin miners turned hyperscaler compute providers, that would have been awesome. Yeah, well, if you have a big portfolio or whatever big is to you, sure, you can spray money in all of the robotic stocks and you might get a big move. But in my personal opinion, there's a favorable risk reward opportunity for Nauticus Robotics right now, off a risk level, not just putting a bunch of money in there and letting it go to zero if it does. And Devon Energy also is holding up well. They do hydrocarbon exploration, so they look for oil and gas deposits. They're out of Oklahoma. $4 billion in revenue is no joke, and they have $800 million of free cash flow as well. So in the same way as Apple has a ton of free cash flow, this company can use that. ExxonMobil has a ton as well when they're able to sell oil. Prices are favorable. So they were able to pay off $400 million of debt with that. So these companies are looking well fundamentally and technically. Not a financial advisor, but let's look at these prices.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's Nauticus Robotics, $2 million in revenue. The highlight headline would be that that's a 400% increase year over year, but they had $300K of revenue before that. So whatever, it's a spin-off startup, and they do ocean robotic, oil rig exploration, maintenance. So they're seeded by Shell and by Transocean. Just maintaining these oil rigs is expensive, and dangerous as well. So this is definitely a good application for robotics, or call it artificial intelligence if you're trying to be buzzword friendly. But yeah, you could say it's AI. They need software to pilot these, to collect the data, analyze the data. And they've gone to 2,300 meters down, which I'm not a deep sea submarine operator, but that sounds like a lot. They did have $5 million in cash as of the end of September 30th. So if we look at the chart, that's right here. So that's the end of Q3, and then the earnings came out 2 months later. So a little bit of a delay there in all the earnings. NVIDIA being sort of the end of earnings season. So I'm not too worried about this sell-off is really all I'm saying. It's like, the company has pretty much gone down the whole time, right? It's a speculation opportunity. It's a SPAC spin-off. And they were funded with $70 million so it's not even worth it to look at this whole move except to say, this is the opportunity. when there's buying volume, there's really buying volume, so it's a company that can go from 15 to 40 in a day. I'm not saying that it's going to do that, and I'm not saying to hold it long term with the expectation of that, but look at the volume here and look at the volume back here. So the volume here is crazy high. Highest volume ever, I think you can say, undoubtedly. So something to pay attention to. And if we look at the intradaily, we can see a level pretty much to buy it off of. So pretty much where it closed at. $1 is a pretty clear psychological level to buy it off of. Risk 10 cents, look for $1 or more. And you could look around for the more quote-unquote established robotics companies. Rich Tech makes the robot bartender. Serve as well. This does like what does Serve even do? This is hard to even remember, but they're in the robotics sector, and they certainly are good at raising money. So it looks like they do sidewalk delivery. That rings a bell. So if you see those little robots with like a DoorDash symbol and you live in a city, they look sort of like, Roombas, but outside your house. That's Serve. Believe it or not, that's a massive market, and people don't always want, a person coming up to their door delivering their food. So if you can sort of create a little more distance, I guess it's kind of sick or whatever, and put it in a robot and have it go up to your door. I don't know. The company has hundreds of millions in money raised and the stock looks good. But again, as far as buying it right now, it just went up 3 days in a row from this euphoria on that rumor. And maybe it'll come down in base, but I don't think that's really a good idea to bet on it early. SOUN, little move. These are just the AI companies, so they're sort of tangential to the robotics executive order, but they're worth mentioning at least. But Kit looks like it's most interesting here. In my opinion, it's always a little scary buying a $1 stock, but that's why you have very close risk level. Devin, creating a little shelf here, already showed us what it can do after it moves sideways. Again, they do oil and gas exploration. This is a really clear breakout, so you can risk maybe 25 cents and get a move of $2 or more pretty clearly. It looks like it's creating another opportunity up here to do that. So could it go sideways a couple days? It could. Do you want to get in early? I mean, depending on how it moves the next couple days, if you can find a risk level like this low that works well for you, maybe you want to do a little bit of a cheat entry before the actual breakout. The breakout would be at 38 and change. And if we look at a 5-year chart, I guess this 38 level is pretty much the level until you get up to 41. But instead of finding the exact level, 37.8, I guess you would say is the exact level. Some people like to only look at the daily chart to find an exact level. But I also find, as you've probably found as well, that if you do find an exact level, often what it does is it'll go slightly above that level, say 38.8, and then fail, right? Because everyone is looking at the same exact point, and people are selling into that. So that's where the whole cheat comes in, if you want to call it that, where instead of buying up there, you buy maybe here, and you risk this high of say 37.4, and you buy at 37.6. So that's enough of looking at that chart. I know no one likes looking at someone else's chart, but I hope that helps. And then as far as the company, I mentioned the $4 billion in revenue and the paying off the debt, which is great. Companies that do have debt are literally leveraged. So they can go up a lot. They can also go down a lot on the stock chart. So makes sense. Paying off the debt, I believe, makes it as safer investment. I'm not saying to hold it for 6 months or longer, but yeah, just makes it more stable. So again, not saying that they're going to succeed, but they already have $4 billion in revenue and they're a $20 billion company. So succeed is sort of a relative term. If they really stop spending on capital expenditures, aka basically acquiring oil rights and drilling and doing tests and paying geologists and all that, maybe that's not good for growth. But that's always the balance between everyone wants the company that has super high cash flow and super great growth prospects, and also, you know, the company that's relatively unknown, and that is a unicorn. Literally, right? That's what they call companies that are being funded by venture capital, that are growing super fast, that are spitting off cash. They call them unicorns because maybe one of them succeeds, but if they do succeed, that's usually the point of them being known. So I'm not going to keep talking and blabbering here, but you don't have to pretend to be, you know, the next venture capital whiz. You can just look at a chart of actual buys and sells, which some of them do now as well. They have crossover hedge fund venture capital funds. I don't think they really like putting them together. Some of them do it anyway, but the whole point of public markets is they're liquid, so you can get in and out quickly. And the whole point of looking at a chart, which a lot of people say is astrology, is you actually get to see how a company is actually getting bought and sold and where the price is agreed to be worth. So there's plenty of volume here. There's $150 million of volume. So any fund could, you know, and I use that term loosely, a family office or whatever, could put a couple $1 million in this with the click of a button. They don't need a block trading algorithm or any sort of employee to do it over the course of a few hours, and they won't move the stock. And that's the kind of stock that is stable, because it doesn't just have people moving it around every time they decide on a whim that they want to mess with other people. So that's the advantage of DVN over KITT. Of course, the daily range is the opposite. So KITT moving 20% a day or more is pretty crazy. And DVN moving 2% a day. So those are all the trade-offs. There are similar tickers you can watch to DVN. You can watch the oil ETF. You can watch the price of oil. And by the oil ETF, I'm really talking about energy ETF. Pretty crazy move, but I don't think you can really read into that too much. Sometimes there's just little, like, I don't want to use the word dark pool, but some of the transactions just don't matter as far as the actual price. And in fact, I can just do that like that and get rid of that, so we get a clear look. So it does appear to be setting up. Some people do buy and sell this as well directly. So this technical analysis matters, that this looks like a breakout. And it's going to be reflected in ExxonMobil as well. So this doesn't look like Shell at all, but the big ones are Chevron and ExxonMobil. And ExxonMobil looks good, and the price of oil is going up, which doesn't hurt, except keep in mind they don't exactly follow this. I mean, look at this down move in all of October. If we look at Devon in October, We see that. If we look at ExxonMobil in October, we kind of see it, but it's such a big company that it's changes the structure on a micro level, but it's still marching up. So as long as you keep in mind which market cap you're looking at when you look at the literal price of oil, you can kind of get an idea of how much it matters. So it does seem to matter more for Devon, but more so keep a look at this level, 37.4. So those are the two ideas on the very opposite ends of the spectrum, KITT and DVN. If you like these ideas, hit that like button for the algorithm to show them to people like you. And if you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. It's free for subscribers. And if you want to trial the chat, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Okay. What else do you got to say?
Number one, I'm debt free. And on top of that, I'm financial savvy and I'm a financial savant and I have and know what to do with my wealth. Okay. Just showing you guys a little bit of game. Okay. Number four, you need to know the total value of your assets. Okay. This will be everything from your house. How much is your house worth? Go on Zillow. Look up some of those sites that can show you what a quick appraisal of your house would be. How much is your house? How much did you pay on it? How much do you have remaining to pay? How much equity is in it? Your stocks, your portfolio, like I just showed you at the beginning. I make around 100K in around 3 days. So let's just say a week. Then I start my account back at zero, and then I just
Whoops, I totally missed this comment. I guess it was just now. That's sort of what we were talking about, though. The next Tesla could be a battery company, AMPX, EOSE. There's another one that's interesting. AMPX, EOSE. Oh yeah, PSTG as well is in the same category, but because that reaction is so bad to that earnings, I don't even want to mention it right now. And then as far as robotics I mean, it's the next Tesla. You have robotics companies, then you have EV companies like Rivian and BYD. The robotics companies I just went over. But the next Tesla is really more of a meme stock proclamation. So people were talking about strategy like it was the next Tesla. But that was only because institutions wanted to buy it because they could say they're buying a stock. Well, they are buying a stock. And they don't have to buy Bitcoin directly. So that was sort of a short-lived euphoric move. Yeah, so I think there's some great idea opportunities. But short term, I think there's some bigger companies that are interesting. Even bigger than Tesla. So XPO Logistics, MongoDB, this powers Stripe. So that's a big deal. 600 million, 20% up year over year. 2 billion improved profitability. So highest everly quarterly adjusted EBITDA for less than truckload. What is that? What is less than truck? Is that what it sounds like? For less than a trailer truck, tractor trailer, shipping container. Yeah, so they split it among. Makes sense. Gosh, I don't know. what these companies do. What companies look amazing? Katie. All right, let's jump into this, and then we'll circle back. Maybe we'll do some questions during this. It doesn't matter. Okay. 2 billion. 300 million for less than truckload. 600 million, up 20% year over year. XPO Logistics. This is what the earnings looks like. And MongoDB is a little bit faster moving. That is a very recent earnings. Yeah, ALAB just got crushed, but I guess it's firming up again. Didn't get crushed. I mean, if you're in it, it feels like it got crushed 15%. But yeah, definitely the conversation, high or low, some increased volume. Sort of in the same bucket I see it as Cipher, Iron, Wolf. I think bounces that happen and then are sort of firming up. That's a flag though, right? Let's see. We got there is one stock that is about to skyrocket. Company just released Q3 earnings. They're in logistics, which is not AI, it's not data center related, but it's also not part of a bubble, because I don't know about you, but I don't see self-driving cars, let alone self-driving trucks, anywhere near where I am. So logistics companies appear to be here to stay for now, before they get maybe into collaborations with companies like Tesla. I mean, it's very early, despite Elon's visions for the future. So the company is XPO Logistics, ticker symbol XPO, and their less than truckload segment had their highest quarterly earnings ever. It's only 300 million, but the reason that segment is interesting for them is it is a very high efficiency opportunity where I'm not going to make a leaps here, but what could be happening is retailers are kind of struggling, a lot of them, and they're not necessarily all requiring, as much as they used to. So I'm sure it helps to be able to deliver a full truckload to the same city and have it delivered to multiple store locations or from multiple suppliers. So any way they can make the most use of that space is great. The revenue shows that at over 2 billion of revenue in total. Company's doing well. It's coming up to sort of a flag formation, which people say doesn't really matter. It does matter because the price is going to make a choice when it gets to that level. And price is, of course, the market. The market is people, is buyers. The chart matters is all I'm saying. There's another company that is coming up to an important price level. It's called MongoDB, ticker symbol MDB. They're the database for a lot of big companies, including Stripe, which is was the largest private company in the world before OpenAI valuation exceeded theirs. Difference is Stripe, we don't get to see their numbers, but it is not unreasonable to think they're profitable, maybe very profitable, given what they do. Doesn't require a ton of compute. They just have a lot of transactions going through their platform and they take a little piece. So MongoDB is the database for them. So they get paid as well every time Stripe needs to create another table or takes on another client who puts more transactions through their databases. So those are the two companies. MongoDB just had earnings. It's at an important level. I think both of these have the opportunity to go up significantly in the near future. I'm not a financial advisor, but it certainly looks like the potential is there fundamentally as well as price levels. So let's take a look.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, so there's a whole host of tickers that might be interesting: CoreWeave, NBIS, Path, SMCI, VRT, SIM, and we could look at those. This is XPO. I think this is interesting given this flag setup and given this recent earnings. So it's at a pretty clear level. It sold off significantly, but got bought up. So someone wants this stock. And that's literally how institutions, which are just, someone, wants to get bonused and get the best price for the stock that they can. And a few dollars really matters when you're buying, I don't know, 100,000 shares or whatever they're buying of this. The amount of shares traded on this day alone were 2.5 million of $100 stock. So we're in the hundreds of millions, high hundreds of millions. And yeah, low hundreds of millions actually, but still, the price is definitely holding up. I think MongoDB looks interesting as well and is at a pretty similar level in terms of shares traded, $200 million per day, dollar volume traded, I should say. It's important to look at the volume as well as the chart itself. Tariffs definitely hurt e-commerce and hurt trucking. But you know what? Tariffs hurt everything. And it might be a buying opportunity for that reason. I don't know exactly which sector is next to go, but the whole point of this type of investing style is you don't have to say, MongoDB is going to be the next stock right here, just because it had great earnings. It might be, it might not be. Databases are definitely going to be required as long as we continue to use computers, and software is super high margin, even though everyone is talking about AI eating software. AI is software. So it's kind of just like, it's kind of elitist talk, I guess you could say. It's like relevant in 10 years from now, whereas the market's happening right now. But I don't want to undersell AI. I mean, CRM and ServiceNow, CRM and Salesforce are both down significantly, those two stocks. But here's the level for MongoDB. Here's that close at 400. That's that psychological level. So if you buy it over there, you risk a few bucks. And look for $30 to the upside. That's what you're looking for. And if you want to get super granular here, maybe buying it at 400, it doesn't make a lot of sense when it's already at 409. And I would agree for someone who said that. This open would be another risk, 405, or maybe even this high or this high, 420. The whole idea is you pick a level and you stick with that level. Because if you're jumping around, you're going to have a bad time. So we'll just make a note of these sort of in reverse order, because these are opportunities that you may be considering. But in general, I think what makes the most sense is the stocks that had recent earnings. So let's look at MongoDB's earnings and let's look at XPO. And then we'll jump into a little comparison. So MongoDB was 600 million in revenue, 20% year-over-year increase. Subscription revenue is that revenue, which is great. They actually started in part as a consulting company. I know one of the people who started it was like educating people as well. So I think that's helps evangelize it, but now of course they that's not scalable. So the great part is that their customers like them and their customers also use them. So it was sort of like a grassroots groundswell of demand. This is a lot of customers, 60,000, and they raised guidance. So strong beat on money and money made. So revenue and earnings per share exceeded expectations, and guidance was raised as well. So that's why I think this opportunity is pretty good. And then as far as XPO, $2 billion in revenue is pretty much near expectations. But the earnings is a little bit higher. So they have a little bit more margin. And part of that, I think, is probably could be related to what we talked about. I talked about, you're watching this recording, the live, of that efficiency from that less than truckload, $300 million earnings, which is the highest ever. So this is a big deal. The AI driven routing as well. That is a application for AI, even as AI helps with self-driving. It's also helping these companies be more efficient in the near term. So that's what to look out for in the long term. You don't want to hold XPO in 2035, but we're not there. As far as these companies that you might have recently seen, SIM was, I mentioned it in here, but I also mentioned a very significant risk level, which is right here. Or, this close, whatever you chose to risk, depending on where you bought it. And this had a price downgrade and just got crushed. So do price downgrades totally matter in the long term? No. But you still want something to hold before you just try to catch a falling knife, in my opinion. VRT, this power generation company, is interesting. You might be looking at this as well. This is pretty ugly, but this was the down day in the SPY that we talked about. You don't have to worry exactly what the market's doing. This thing's been charging up. It's a little sloppy, but if it can build something out, that's definitely interesting. SMCI as well is it's in this bottoming category. It's tough to buy after messy earnings. It's kind of like, this is your ideal scenario, right? As you pick the right spot and then you get a 15% like you got with Meta. But SMCI is a semi, just like A-Lab. And yeah, maybe these guys got shaken out and you're in at the right time. But I'm not a bottom dip buyer. I'm not to say this won't work for you. But it's not really my cup of tea to guess here when you might, be stuck for another 10%, 15% down before you get a move. So that's just me. Path is another one that people have been talking about. I talked about it as well. They had solid earnings. This one I was excited about and still am. And this is the level to buy it at 18.4. They have that collaboration with Microsoft. NBIS, Nebius is this NVIDIA invested company. I think NVIDIA invested, $700 million in them. So it's not a lot for NVIDIA, but it's a lot for a startup. And they are this GPU infrastructure layer. This is a little worrisome, but again, this is that market day. And it seems to be building out in the right direction. It would be great if it built out a base instead of just sort of marched up like this, because this is hard to get situated in without getting stopped out. But sorry, this is just totally frustrating me, not remembering what happened on November 20th in the market. It went down a lot. So we'll jump into that. But this is this logistics company, 100,000 employees, 50,000 customers. And they're multinational. So I think they've been around. And then MongoDB, again, a massive company that's been around for a couple decades. So I don't really know what to say about these besides they're real companies. And they're probably more worth buying than a lot of speculation names. So looks like this was the little AI bubble pop. I'm not sure there was any particular reason for that, but on a particular day, I'm sure I talked about it. The important thing is that the SPY is looking okay now. No one can say exactly what we're going to do, but gold is holding up here, and people were saying down here, well, they were saying all along this point to buy gold, but it's not when people say you must own gold. This is when people were saying you must own gold. And of course, what happened there, there was selling. So I think this move up is definitely interesting. It's going to be something to watch. I don't know that I want to jump in any of these names right now after they just had big moves, but it's something to definitely keep an eye on. NEM, AEM, KGC. KGC is the big gold miner. Could we have another rip like this? We could, but I'm not Mr. Fundamental. You could say that gold is becoming a safe haven as Bitcoin becomes more unstable and people got liquidated. And ever since that liquidation day, we've just gone down, down, down. This is this November 20th day. Someone in the comments has got to tell me what happened on this day. This was only like a couple weeks ago. But it's almost as big a down day in the market as that crypto liquidation day was, which was the rare earths day. Not in terms of actual Bitcoin drop, but silver as well, sort of leveling off AG is the way to look at that. So these commodity names, the idea is gold is a safe haven, right? So if the market rolls over, maybe gold does break out. But at the same time, people were buying gold in September when they were buying the market. So it's not really that simple. But you don't have to pretend to know what's going to happen unless you're trying to basically woo a bunch of investors. All we really have to do, or you have to do, I assume, is you're up to the same thing as me, otherwise you wouldn't be watching this video, is pick a price level, see what investors are actually doing, and then say, okay, well, they definitely want XPO because there's a lot of buying over this 145 level. So risk 144 and risk $1 to make 10. Now, could it go up a lot more? It certainly could, but you could sell half and then trail the rest. So that's XPO. And then for MongoDB, we already went over that level right there. So there's those ideas. If you like those ideas, hit that like button. Love the live stream questions, comments, ticker ideas, all of it. And you'll see that in the recording. If you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe button. I'll see you in the Discord on Monday. Head over to stockscommunity.com to see those testimonials. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is